Hi everyone, so today I'm going to be covering Indie Semiconductor. This is going to be Q2 of 2025, so let's get right into it. Alright, so I'm going to share my screen again, and we're going to take a look at what's going on. And it seems to me that the earnings came in mixed. So they came out today, they came out yesterday, but today as well. And you have the latest reported quarter EPS coming in at -8 cents. So EPS versus consensus, it's in line with the consensus. However, another report states that the EPS was -20 cents, missing the estimate by 12 cents. This discrepancy might be due to a difference between non-GAAP and GAAP EPS, as the non-GAAP EPS was -8 cents and the GAAP EPS was -20 cents. The revenue was 51.63 million, surpassing the estimate of 51.4 million by 0.26%. And then revenue decreased slightly from 52.35 million in Q2 2024, so revenue did decrease slightly. The outlook is expected to be between 52 million and 56 million, with a midpoint of 54 million. So profitability not yet expected to be profitable. So keep in mind too that with Indie, it's more of the up and coming companies. Market cap still under $1 billion, so it's a very small company, or it's considered small cap. Just keep in mind of these things, and I think it will hit profitability eventually. The good thing is that they didn't revise down their guidance for the rest of 2025, which is great for Q3 or the rest of it so far at least. It is going to come into what they've been saying from the beginning of the year, which is great. And if we check a little bit more of the things here, Indie Semiconductor has a moderate buy from 7 analysts. So that's good, which is not true. It's actually a strong buy. I'm going to show you that in a second. But here's some of the strategic initiatives. The company's focused on reducing operating expense and accelerating profitability. They reduced by 8 million to 10 million by the fourth quarter, aiming for a break-even revenue base of approximately 65 million per quarter. And some of the recent developments, Indie announced the acquisition of Emotion 3D, a specialist in perception software for cabin sensing and advanced driver assistance systems, ADAS. The company also repurchased 30 million of convertible notes during the quarter, so they're reducing debt. So that's good overall, I would say. Next thing we're going to check is simply Wall Street to get an update on them. And it seems to me that it is getting... the problem is obviously because it's such an unpredictable company. The earnings do seem good. The free cash flow, there's not going to be anything from the analysts. But if we go by the green line here, which is the earnings rate, right now it's probably absolute bottom, and it looks like they are trying to get better and better, and eventually I think they will be free cash flow positive. Eventually, I would say in the next maybe 3 years, I would say by 2027, 2028. So yeah, given. So next thing we're going to see is the financial health of the company. Financial health of the company, it's mixed, I would say. You have higher equity, higher debt, but lower cash, which you generally want to see cash above the debt. And yeah, you have it here, long-term liabilities. Short-term assets don't cover its long-term liabilities, which could be problematic, but it's not as bad as some other companies I've seen. So it's okay for now. I'd say it's very meh. It's very okay. There's really no big problem, I would say, with it. If we check my DCF on it, my DCF is going to say it's 94% undervalued, but keep in mind this is historical growth. If we go by Wall Street forecast, which is 36% revenue growth, then it's going to come at 53% undervalued, and that's going to come a lot closer in line with Tipranks, because if I load up Tipranks super quick, Tipranks 5 strong buy, 70% upside on the stock. So keep in mind, I do think that Tipranks is going to be right on this, and we'll see in the future. I'm going to cover Q3. All right, thank you, everyone.